Infrastructure development remains a key focus area of the government, with significant increase seen in capital expenditure on the infrastructure segment in the recent budget. In the infra space, road and water, which are the key segments where PNC Infratech operates, have strong growth opportunities. After a lull of new orders in the past 4 to 5 months, PNC has recently won a spate of new road projects, which has improved the revenue visibility. Moreover, the current inflationary environment is unlikely to have material impact on the margins of the construction companies such as PNC, as increased raw material prices are passed on over the life of the project. PNC, with strong execution capabilities and track record of financial prudence, would be the key beneficiary of increased infra spends, and it's our conviction pick in the construction space. The stock has corrected by about 35% since its all-time high witnessed in October 2021 and definitely provides a good entry point. PNC's order inflows for 9 months of FY22 were weak, with the company receiving orders worth 2,700 crores only compared to the top line of nearly 5,000 crores. However, in the past 1 month, PNC has received strong order inflows. From the latter part of Feb 22, PNC has bagged 7 road hybrid annuity model projects with bid project cost worth 8,446 crores. With the new order wins, PNC has surpassed its order inflow guidance of 8,000 crores for the current fiscal year. The recent order wins significantly augment revenue visibility over the next 2 to 3 years. Recently, the government has made changes to the bidding rules for road projects, which form about 70% of the company's order book. The government has reinstated the requirement to provide bid security for executing road projects, both HAM and EPC mode. Also, the government has come up with a new bidding capacity criteria norm. New players who have bagged a lot of projects in the past 2 years will have lower bidding capacity and therefore will not be able to take up more new projects. These measures will reduce the competitive intensity in road projects, thereby benefiting incumbent players like PNC. Roads and water segment, the key areas for PNC, have presented strong growth opportunities. Road development remains a big focus area, with the government aiming to build 25,000 kilometers of highways next fiscal, which is almost double the record levels witnessed in FY21. In the union budget for FY22 to 23, allocation for roads and highways was increased by a stellar 70% to 1.98 lakh crores. While national highway construction and awarding were affected from October 21 to Feb 22 due to extended rainfall, third wave of COVID-19 as well as elections in 5 states, we expect strong pickup in the next fiscal. The government is also increasing spends on the Jal Jeevan Mission to provide safe drinking water in rural households. In the latest budget, Centre's capital spending under Jal Jeevan Mission was increased 33% to 60,000 crores. Various state governments are actively awarding projects under the mission, highlighting huge growth opportunities. PNC received contract for the supply of drinking water for 4,800 odd villages so far. Project worth is expected to be about 7,000 crores once the final approvals are received, and the company expects the revenues to commence from the current quarter. PNC has a track record of strong project execution and has several early completion project awards. In the current month, PNC got an early completion bonus worth 82 odd crores. It completed the Purvanchal Expressway from Sansarpur to Gobindpur in Uttar Pradesh 132 days ahead of the scheduled completion date. Accordingly, the company received bonus at the rate of 0.04% per day of the contract price of 1,566 crores. PNC is among the few companies that have focused on keeping leverage under check and maintained balance sheet strength. Historically, it has maintained its debt-to-equity ratio in 1.1 to 1.4x range. Avoiding excessive leverage has enabled smooth project execution and steady and continued tapping of growth opportunities in the infrastructure space. Now, at the current market price, the stock is trading at a PE of 9 times its FY23 projected earnings, which is at the lower end of its long-term historical average multiples. PNC is also one of our conviction picks in the construction space, and we recommend investors to add the stock to their portfolio.